Yes, so now we are discussing about economics. In that economics, institutions boost options trading. That is the option today. Institutions boost options trading. Institutional buy side firms are much more comfortable trading options compared with a decade ago, driven by greater awareness and education that has diminished the perception that options are inherently and overly risky. So, the uptake has been partly driven by the boom in retail options trading. One thing I want to suggest you that in options trading, sometimes it will boom like anything. So, from 10 points to 20 points, it is increasing means the almost all browsers will feel that it is again increasing from 20 to 30. So they will buy at 20. Again, it will down to 10 again. So options trading by boosting the options trading and increasing points, you should not consider. You should always consider the standards of the company and you should also observe the balance sheet of the company and what are the dividends they are giving, how much of dividends they are sharing, and what is the income of that company, and what are the assets and debitors. What are the debits are there. If you see all these things, if it is 80% to 100% of assets are there, debits are 10% means you can consider that company. So likewise, you should always feel and comfortable and study also should be there. It's not a one day process in getting success in options trading. Around 6,000 scripts are there in Bombay Stock Exchange. So at least daily browsing companies will be there in top 10 or top 20. Now you cannot try all the companies. First, if you select only top 10 trading companies means you can search for their balance sheets and what are the assets they are having, how much is the percentage of debits, what is the general growth of the company, and all these things. Even growth thing also, suppose it is for every growth of the company there is a break-even point. So generally human being will height up to 6 to 6.5 feet. So likewise company growth is also from 0% to 10 to 20, 30. After 10% is reaching, it is break-even point is there. Once a break-even point is there, next year to this year there is no growth means it is bad. Your thinking is not good. So you should see that how much is the growth and how much is the break-even point of that and how much assets that company is having, how many debits are there. All these things you should think. Only by browsing option trading, 10% is increasing. Again, it will increase 20% means you should buy at 20% means again it will come down to 10% again. Then you will lose your money. So only browsing growth and all these things, our vision is good. They are saying accurately what is presently going on. But you should think about all these also. Then your business will be successful. While selecting one good standard company means it may not increase today, it may not increase in this month, but definitely it will increase for the time being in the optimum stage of that stock. So always think over emotional decisions should not be taken in this case. Then only your options trading will be successful. And next, options are becoming more mainstream and bleeds over to the institutional side. And said seeing true to Senior Vice President Strategy and Business Development at Fox Options Market, we are building off retail. So we should be very careful that we should not do any emotional business. We should always see the long-standing companies only you should select. Long-standing companies and standard companies if you select, and the productive companies if you select, the margin you may not see now, but for the time being you can see. and it may not grow 10%, but it will give a reasonable growth for the time being. That is, you should see. So we should not forget about that. Megan Morgan, head of market structure at Proprietary Trading from Belvedere, noted that a decade ago, a pension fund manager might agree conceptually that options would help the portfolio, but getting approval from the board would be a no-go. Today, that same pension board member and their family members might have their own Robin Hood brokerage account. Especially if you see in India, banks will be there. Around 50 to 51 banks, always trading will be there. In that, you can select the top 10. In that, trading will be there. You need not get income in this day, but for the time being, the average income will be increased like anything, from 10% to 15% likewise. So you can purchase those things. So always see standard companies first. Then you can go for secondary companies. Then it will be very nice to you. If you are a small trader means, small options trader means, you should always select best companies. Even one share also you can purchase. That is good for you in the trading. And next point is, it is easier for PMs to educate their board because they are more aware of options. Morgan said, once if you get good experience, then you can go for secondary market also. Standard and Poor shares also you can purchase. But what is their productivity and what are their assets and what is the growth of that? All these things you can understand. You should study. Without study, if you invest on secondary market means it will become a big problem to you. So always be careful regarding investment without seeing the balance sheet, especially Standard and Poor companies of top 500. So then you will be successful in this trading. Institutions are gradually adding more complex options strategies, and there is some systematic trading as well. Truitt said, the panel discusses the rise of flexible exchange options, non-standard options that allow the writer and purchaser to negotiate terms. Next point is there is demand and room for growth as the bespoke nature of flex options makes it attractive, but Weinstein termed it a transient market, not as transparent as exchange. Listed options are not as opaque as OTC that would need to move toward transparency to accelerate growth. Lastly, the panel discussed 0 days to expiration options, which now comprise about 20% of retail flow. Institutions are involved in ODTs, but they are using them for technical rather than speculative purposes. Weinstein said, at this point, right now, it is healthy and everybody loves the volumes. Hopefully, it is sustainable. Morgan offered a long-term view in that options to market operators and trade handlers are trying to determine the trajectory of ODTs. It is everyone going to do this and it is going to 40% of retail flow? She asked, if it does, how do you manage that from a risk perspective? This is the information. So, in institutions, boost options trading means you should be very careful regarding in boost options trading. Wishing you all the best.